Do you know what the average credit score is for people in your age group? Wondering how your score tracks up against others in your generation? Well, look no further, because in this video, we'll be exploring credit scores against the backdrop of age. I'm going to talk about how credit score varies between age groups and provide guidance on how you can improve your own. Whether you're a recent college graduate or approaching retirement, understanding your credit score is crucial for your financial well-being. So, let's get started. Welcome back to the channel. I'm Andy from Credit Sage, where we're all about making sure you know everything there is to taking care of your credit. With over 3,000 reviews and a 4.9 out of 5 Trustpilot rating, we pride ourselves on being a trusted source for credit advice. As always, today I've got some valuable tips that will really help boost your score. So no matter what your age is, let's jump in. Now you might be thinking, why does age really matter when it comes to credit scores? Well, we'll get there. Be patient. But first, let's revisit our understanding of credit scores and how they work. What exactly is a credit score? It's a 3-digit number that shows your trustworthiness when it comes to borrowing money. The reason why credit score matters is that they play a crucial role in determining whether you can qualify for loans, credit cards, and other types of credit. Lenders use your credit score to assess the risk of lending you money, and a higher score means that you're less risky and more likely to repay your debt on time. A lower score, on the other hand, may make it more difficult for you to get approved for a credit, and it may end up, if you get one, paying higher interest rates and fees. Credit scores are calculated by credit reporting agencies like Equifax, Experian, and TransUnion. The most commonly used scoring model is the FICO score, which ranges from 300 to 850. FICO uses a complex algorithm to evaluate your credit history and determine your score. They look at factors like your payment history, credit utilization, length of credit history, types of credit, and new credit inquiries to determine what your score will be. And did you know payment history makes up a whopping 35% of your score, while outstanding debt makes up 30%. Credit history length, the pursuit of new credit, and the types of credit you use make up 15, 10, and 10% respectively. And moving on to how credit scores meet age. According to credit reporting agency Experian, there's a wide range in credit scores from Generation Z to the silent generation. So, what's the average credit score for each generation? Well, Gen Z adults, 18 to 23 years old, had an average score of 674 in October of 2020, while the oldest generation, age 75 and older, had an average of almost 85 points higher at 758. That's a big difference. But it's not just about age. Millennials, ages 24 to 39, aren't scoring far above Gen Z. With just a 680 average, from there, it's a 19-point jump to Generation X's average of 699, ages 40 to 55. And then a bigger jump to the average baby boomer score of 736, ages 56 to 74. Now, you might be wondering, why is there such a difference between the generations? Well, it's not because age is an explicit factor in calculating your credit score, rather than a direct correlation between your age and your score. Older consumers have had more opportunities to build up their credit history and establish a positive repayment track record than the younger ones have. Keep in mind that no matter what age you are, your credit score matters. Whether you're a student just starting out, a young adult looking to buy a home, or a retiree enjoying your golden years, your credit score can have a big impact on your financial health. Now, I touched on this briefly earlier, but let's take a closer look at why. Now, for starters, a good credit score can help you qualify for loans, credit cards, and other types of credit. This means you can get better interest rates, lower fees, and more favorable terms, which can save you money in the long run. But it's not just about getting approved for credit. A good credit score can also benefit you in other ways. For example, landlords, employers, and insurance companies may check your credit score as part of their screening process. A high score can make you a more attractive candidate and increase your chances of getting approved for an apartment or a job or insurance policy. On the other hand, a low credit score can make it harder to get approved for credit and may result in higher interest rates and fees. It can also limit your options and make it harder to achieve your financial goals. So whether you're a Gen Z just starting out or a baby boomer enjoying retirement, it's important to keep an eye on your credit score and take steps to improve it if necessary. By practicing good credit habits like paying your bills on time and keeping your credit utilization low, you can build a strong credit history and improve your score no matter what your age is. Now, if you're lost on exactly how to build credit or maybe ensure that your credit score stays healthy, or perhaps you've hit a bad place financially and you want to improve, don't worry, I've got you. The first place you're going to want to turn to is Credit Sage. Our team offers a variety of services such as credit repair, credit monitoring, and credit coaching, all tailored to your individual needs and goals. With our personalized plan, you can save yourself the headache of figuring out how to improve your credit score on your own. Let the pros handle it. We've got years of experience and know exactly what to look for, so why wait? Just give us a call using the number that I'll drop in the description below, and you're well on your way to a healthy credit score. If you're keen on getting into it yourself though, here's a couple of things to do. To build credit from scratch, there are 3 things you want to consider. First, try applying for a secured credit card. These cards require a refundable security deposit, which becomes your credit limit. Use the card responsibly, pay your bills on time, and your credit activity will be reported to all 3 credit bureaus. Over time, this can help you establish a positive credit history and improve your credit score. Just make sure to choose a secured credit card with no annual fees. Now, another option is to become an authorized user on a friend or family member's credit card. This lets you benefit from their good credit and establish your own credit history quickly. But be sure to choose someone with responsible payment history and create a plan to pay back your purchases you make on their account. Finally, maybe consider a credit builder loan. These loans require you to make regular payments into a savings account, which are then used to pay off the loan. Once you've paid off the loan, your payment history will be reported to the credit bureaus, boosting your credit score. And because credit builder loans are low risk for lenders, they're often available to those with no or little credit history, with lower interest rates than other types of loans. Now, that's just 3 easy ways to build credit from scratch. On the other hand, if you're looking into credit repair or simply improving and maintaining your score, you should do the following things. First things first, check those credit reports. You're entitled to a free credit report every year from each of the 3 major credit bureaus. Mistakes in your credit report can be a real headache, lowering your score and making it harder to get credit you need. So be sure to review your credit reports for these errors and dispute any inaccuracies as soon as possible. Paying bills on time should be a no-brainer. It's the most crucial factor in your credit score. Missed payments are a surefire way to sabotage your score. They can stick around on your report and make it harder to get approved in the future, so avoid them at all costs. Also, keep those credit card balances low. Keeping your credit utilization rate below 30% can improve your credit score and show lenders you're not relying too heavily on credit. Another thing is, don't apply for new credit unless you have to. Every time you apply, your score takes a hit. So save your score for when it matters most. Also, keep your old accounts open, even if you don't use them. They help to show a long credit history and ultimately improve your score. And like I mentioned before, a credit builder loan can also come in handy when you're trying to improve your score. Take a long-term approach to these steps and you'll build a solid credit history that benefit you in the long run. But again, if you're listening to all of this and still feeling stressed and overwhelmed by all of these credit management steps, or just don't have the time to dedicate to managing your credit score, there's another option. Contact us here at Credit Sage, and our expert team will do a quick and easy phone consultation to help you sign up for our credit management services in just a few minutes. We know the ins and outs of credit management and have the expertise to help you raise your score. So why not take the hassle out of managing your credit score and let us handle it for you? We'd love to do it. If you found this video helpful, please show your support by hitting the like and subscribe button to our channel for new videos each and every week. And thanks for watching.